Hey everyone, Tony Ivanov here, lead trader and founder of TradeBuddy. Today was a pretty disappointing day at first. As you know, last week was probably one of my worst weeks ever trading. Every single day was red. Thankfully, no big extravagant losses. I was able to just manage my emotions and stay disciplined, but I will come out and be honest and say, every single day was red. It was probably one of my worst weeks of my trading career, not in terms of losses, but just in terms of my consistency. I was just not seeing any support on my dip buys. As you guys know, I've been trying to move into dip buying, and last week it just wasn't working. And I came back today, I refined my dip buying strategies, but still every dip buy I did was just a failure, and I ended up the morning down like $500, which was pretty significant. I'm usually not down that much, but it was what it was. So I stepped away from the market for a bit, and then we saw a miracle happen. GEVO squeezing up, doing an amazing short squeeze, went from the low $4, hit a high of, let me see, $21. So this is kind of the move that we see happen after we have weeks and weeks of just a bunch of stocks that are just getting slammed by shorts. And what happens in these types of markets is that as the shorts see that everything's working in their favor, everything's crashing, they get more and more and more and more aggressive. But eventually they get too aggressive on the wrong stock, and then they all get squeezed significantly. And that's what we saw on GEVO. We've seen this before on IMTE, DCIX, stocks like that, where the shorts are just so confident of their plan of all these gappers just failing. Eventually they're going to get too overzealous, too confident, and then they're going to average up their positions, not cut their losses, and then they just get squeezed miraculously like we saw on GEVO. So I'm going to break down this trade. I was able to turn my day around from being down 500 to being up $583. So one trade on GEVO, I made nearly $1,000, which was absolutely awesome. So I'm going to go over that trade. I left a ton on the table. I was buying it in the 5s and selling in the 6s, and I had no idea this was going to go up to $21. Signs were there, but I just didn't recognize them in time. But we're going to break down GEVO very, very deeply using technical analysis and trader psychology. So hopefully next time we see a move like this, we can all capitalize it and make some awesome profits. So hopefully you guys enjoyed this video lesson, and let's get right to it. Alrighty everyone, so here is the amazing chart of GEVO. You can see this one was a pre-market gapper starting out the day at $3.75 and eventually hitting a high of $21 on the dot. Now, why did this run? What caused this move? Why did it move almost, what was it, 500% from top to bottom? I'm going to break down why this happened, what was the catalyst, what was the variables of this play, and how you can capitalize on a move like this. Now, these plays do not happen often, so don't think that we're going to get another stock tomorrow that squeezes up to 500%. It's possible, but don't count on it. These type of plays happen, like I said in the intro, after weeks of just bad price action for longs, where the shorts are just dominating the market. And we saw that all last week. Just take a look at any of my video lessons last week and you'll see exactly what I mean. We had so many great setups that were just getting stuffed, and we're getting just really heavy selling and lots of shorting. So if you need any refreshers, just look at my last week's video lessons and you'll see many examples of that. And then once the shorts get too overconfident, they don't want to take their loss and they average up, and then as they get squeezed, they have to buy back their shares, causing a further amount of buying volume and then a further squeeze, and it's just a domino effect of the shorts either averaging up or eventually buying back their shares and squeezing up the price higher. So the first things first, we want to look at what was the float on GEVO. So one thing with these short squeezes is that they usually happen on stocks with the low float. And if you look at my Trade Ideas low float movers scanner here, you can see GEVO is listed to have a float of only 1.05 million shares, which is a very, very, very small float. Now, next you want to see what was the catalyst on GEVO. So let me just get my E-Trade Pro open real quick. Let me get the news window open, bring it over here, and we'll just type in GEVO and see that, where is it? All the way down to the bottom, right here, 13 hours ago. EPA approves registration of this one additive up to a 16% blend in gasoline. So what happened is that this additive that GEVO develops, they used to be only restricted up to 12.5% blend in gasoline, but now they can use up to 60% blend. So that means that, you know, they're going to be using more products, selling more products. So that's going to be good news for the company. This news right here was the catalyst for this amazing squeeze, but not the main catalyst. The main catalyst is the fact that it is a short squeeze. So just breaking down some patterns here on GEVO, what we want to look for and what I have really noticed to be a very good pattern in this market is, one, we're not going to be looking for breakouts, or we're not going to be looking for dip buys anymore. I'm going to switch my focus back and look for breakouts. I want to be buying where the buying volume is, because we've been seeing that these stocks will run up and then they will lose volume so fast, and then you'll just be left holding the bag essentially with no volume, and then the stock will eventually crack on you. That happened to me every single time last week, and I was wondering, why are all of these stocks losing so much volume? So instead of trying to buy into these dips and trying to be early into the play, I think it's better to wait until the buying volume comes in and hop in right at the moment and ride the volume wave up. So some of the best areas to buy GEVO would have been, one, pre-market. So you can see we have a level of support that is from the daily chart. That's why it's from yellow, at this resistance of the 75-cent mark in $4. So let's just go back to the daily chart real fast and just look at this daily chart. So you can see that this stock is pretty beat down, but it has some good range. Now, I do want to say that GEVO just did a reverse split, so that's why the price looks like it's been so expensive. It was never $300. It's a reverse split. But you can see we have some levels of resistance and support marked out here on the daily chart. So just for a quick visual here, you can see we had, here's that one level of support. Next one was the 550s, then 620, 735, 770, 837, 989, and so forth. So whenever you see these yellow horizontal trend lines on my videos, that means that it is a level of support or resistance from the daily time frame. So going back to the intraday, that would have been one of the best areas to buy for pre-market, because you can see it clearly made that level as resistance and it made a nice U shape. So buying that U shape breakout on that level of resistance would have been very good odds. And you can see it squeezed from the 474s to 528. So very easy winner there. But then you can see that it sold off at the market open. And when this happened, I thought, okay, GEVO is done for, had a big morning panic and lost all of its volume. Look at the volume in the bottom corner. You can see volume died off as we approached 10 a.m. But then you can see that we made lower lows, and then boom, we made higher lows, higher lows, higher lows, and higher lows. And it was squeezing into this wedge here. Look how tight the middle Bollinger Band got. Let me just get this trendline tool. You can see very clear gradual descending wedge right into that critical level of resistance at 475. So you can see right when we broke this wedge, we had immense buying volume coming. You can see the minute prior to the breakout, on average, 2,000, 3,000 shares. The minute it broke out through that previous level of resistance of the previous chart resistance, you can see we gained massive volume here on this candle, 60,000 shares. And then you can see as the price squeezed up, the volume squeezed up. So that would have been a very good entry point, buying the breakout over 475. And I know some people bought way down there, and you know, they're still holding. Surprisingly, I'm not sure why you would still be holding after that massive crash. It could do a day 2 move, but that's a different video. But let's see. So the first place that I bought GEVO using breakouts, I'm not going to talk about the dip buys because I don't want to teach that pattern because it's obviously not working right now. I bought GEVO on the breakout over 574. So that was right up in here. I bought the breakout after this dip down to that previous level of support at 528, and you can see that was the pre-market high. So let me just take a step back and talk about this this move, this massive U shape. Whenever we see these massive short squeezes, I've seen this happen time and time again. We have the morning run in pre-market, we have the morning dip, and then it makes a big trough, a big U shape. It makes higher lows, breaks the critical level of resistance and gets massive buying volume and squeezes through the high of day. Then what happens is that it'll dip down and then bounce off of that previous level of resistance. So that is the only dip buy I would recommend doing on this type of play, is you buy the dip that dips off of the pre-market high. Because once you have confirmed that level of resistance as now support, this stock is immediately bullish, and shorts are going to be looking to cover up their shares. So you can see it had a very strong bounce off of that 531 level, squeezed up through 576, and that's where I bought. I bought the breakout of 575, 1,000 shares only. Let me see, 1,000 shares? Oh no, I'm sorry, 2,000 shares. I went a bit heavier on this one just because I was tired of the dip buying, and I knew that this breakout would work because I knew this short squeeze setup. So I bought finally at 575. I was looking to buy this dip, but you know, because I already had 3 bad dip buys in the morning, I was just done with buying dips. But of course, the one I didn't do worked out flawlessly. Hindsight's 20/20, I guess. And then on this one, I really underestimated how much GEVO could squeeze. I just wanted to lock in a nice profit on the day, and I sold my first 1,000 shares at 610, and then I sold the other 1,000 shares at 669 as it squeezed through this level of resistance at 620, as it squeezed on through, and I sold into this 670s on this awesome pop right here. What happened was, like, it had this pop through 620, immediately popped up to 669, and I sold immediately. That was a very big win for me. So that trade in itself was like almost $1,000. So it brought me from being down 500 bucks to being up $583, as you can see there. So the main thing that I want to say with this type of short squeeze is that you just have to understand what the psychology of this trade is, and you have to understand the overall like dynamics of the market, and you have to understand that the past 2 weeks the shorts have been on fire. They've been killing every single stock, pushing it down to the ground, and they've been making lots of money. So what happens is that as it is moving up in pre-market, they all jump in and they all short it, and then boom, it drops down $1 per share. But they want more, so they keep adding into their size, taking more shares short, and ultimately, as it gets this big buying volume, that's the start of shorts squeezing. And then as a short, you either have two choices. One, you either take the loss or average up, hoping that it's going to be a double top against pre-market highs, and then you can write it back down. And that's what a lot of shorts probably did. So they kept adding into their shares, trying to average up their position because they don't want to cover up and take that nasty loss. But then what happens is that once you have that bounce off of that 529 level, then all the shorts are really going to be just largely afraid of a squeeze, and then they start to cover up. And then the thing with using short selling is that you borrow your shares to short. So when you want to leave the short position, you have to buy back shares and return them to your broker. So as shorts are getting squeezed, they're buying back large sums of shares, 10,000, 15,000 shares, because some of these shorts have like multi-million-dollar accounts, and they can use very big money to shoot these prices down. So you see these big buys of 5,000, 10,000, 20,000 shares, causing the price to just jump up astronomically, and then it just squeezes through all the levels of resistance. Now, all in here, I was at the gym. Unfortunately, I did not capitalize on any of this move. I didn't think that it was going to squeeze nearly this hard, but after that main play in the morning, it's just a factor of buying the breakouts and understanding the short squeeze. So you can see all throughout here, this resistance of $10, which was on the daily chart, was acting like a flat top wedge. It did one failed breakout, dipped back down, but then it came right back up because the shorts knew that this is going to squeeze, and they were covering up their shares. And also because longs are hungry for profits, because us longs for the past 2 weeks have been making almost no money. So now longs are hungry. They're chasing. They have the fear of missing out. They don't want to miss out on this one play that could change their life. And everyone gets emotional. So everyone starts chasing. Everyone's covering. And it just causes this massive buying volume. Squeezes through $10. Immediately jumps to 11. So you can see a bunch of shorts covered there. Pulled back. Bounced off of that previous level of resistance, which is now support. One thing I've noticed is that these dip buys off of the previous levels of resistance work really well when it's happening during a short squeeze, because all the people who are going long know that they need to keep it above that resistance, and all the shorts see that once it bounces off that price, they're going to cover up and make the dip buy work. So they're going to just be causing the dip to bounce because of their buying volume. And then after that, the rest is history. It's just a pure short squeeze, pure fear of missing out, and just pure emotions. So one thing I want to mention about this play happening is that we should be seeing a bit more runs happening in the market tomorrow and the rest of this week, and hopefully for however long this volume can come through, because now shorts are going to be kind of worried about hitting plays short that are the first green day on news. So now we're not going to have the big walls of sales to stop the spikes, and we could really see these low float stocks opening up. So the main things we need to look for is we need to look for stocks that have good news and low float stocks, because those are the two combinations you need to have a big spike and a big short squeeze. So that's my quick little video lesson on GEVO. If you want a more detailed breakdown and a live recording of this entire play, you can join my mentorship program, which is actually a lifetime program where you get lifetime access to my course, lifetime access to my platinum chat room, and lifetime access to my video library on my website, where I do detailed analysis of these plays that I record during my live stream. So if you guys enjoyed this video lesson, please leave comments down below. If you guys have any issues with this video lesson, leave comments down below. I'd love to have any comments heard. And if you guys enjoyed this video lesson, leave a like and leave a subscription, and I'll see you guys in tomorrow's video lesson.